everyone. My name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Thank you for joining us today. We have two subject matter experts with us. I'll introduce them in about a minute. We'll let everyone log in today. We're going to do debt service coverage and focus on short-term rentals. And if we have time, we'll try to cover foreign nationals at the end. Everything, some housekeeping rules, everything we're doing today is from our website. So it's not a PowerPoint presentation. It is live, so there might be a mistake here and there. We'll fix it. But and this is being recorded. So the recording will go out before end of day tomorrow. So, and if we don't get to the question queue, if you can ask all your questions through the question queue, that'd be great. And if we don't get to answer your question, we will get you your account executive in touch with you to answer any questions and scenarios that you might have. So hope everyone's finishing their June on a strong note. And I think, this debt service coverage ratio is our most popular program by unit. And it's a great program to get started with if you haven't done any non-QM business. I know if you're looking at the screen today, we've launched a new website. So if we have some time, we'll take you through how to navigate through. It's still a lot of the same stuff, but we've built a lot more efficiencies into it. Just one example is the user access request form is not, you don't have to download a PDF. It's now available on our website. So, all right. People still logging in. Great. All right. I have the honor to, again, my name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Just celebrated my 12th anniversary here, just at Angel Oak. So, yay for
Congrats.
me. Hold on, let me get that. But I have the honor to introduce two subject matter experts, and I've known them a pretty long time. I've known Tom Perry. Please introduce yourself, Tom. I've known you for well over a dozen years. So
yeah, since 2013, I believe. So
yeah,
been a while.
Yep.
And you're still keeping me around, so that's great. I appreciate it.
Congratulations.
Yeah, been here at Angel Oak for 4 years. Just reached that anniversary, and just reached a 37-year anniversary of being in wholesale and correspondent lending. So would love to share whatever I can with anybody that needs help getting a loan closed. But glad to be here and ability to be able to talk about this great program, this DSCR loan that is, like you said, our #1 producing loan.
Yeah. Yeah. And Jack's a familiar face on these webinars. Jack Stevens, please introduce yourself.
Yeah, of course. Don't think I've been in the working world for 12 years, John, but I've been at Angel Oak for 6. So always a pleasure doing these webinars, guys. And we're just going to give you with enough ammo to honestly just create a book of business that is, it's going to be able to really scale up your business. Let's just put it that way.
Yeah, Jack, Tom and I would like to wish you well in your future endeavors. So, yeah. So, guys, let's get started here again. This is being recorded. We will get this out before end of day tomorrow. So before we get into the debt service coverage ratio program, we're going to launch a poll. And in that poll, we're going to ask you if you've originated a debt service coverage ratio program in the last 12 months. So, guys, this is where I fly a little blind here. So let me know if the poll has been launched.
Poll's been
okay.
launched.
Looks like
okay.
It, yes.
So, let me just give you, some stats here. We talk about, we're going to talk about purchase, refinance, and cash out here too with the debt service coverage ratio. 40% of, people are voting on the poll. 40% of homeowners in the U.S. own their houses outright. 63% have mortgages less than 4%. 85 have a rate below 6%, and home appreciation since 2019 have appreciated about 50%. So if you can't get that purchase business, if you can't get that cash out business, so let's show the results of the poll if you guys don't mind sharing that with me.
Yes, 71% have originated a DSCR loan, 29% have not.
That's great. That's great. So, and I believe the 71%, Jack and Tom, correct me if I'm wrong, it's because these are really really easy loans to originate. And
Yeah, I agree.
investors, yeah, and investors are not. Sorry, go ahead, Tom. Sorry.
No, I was going to say, a lot of people think that VA IRRRLs are the easiest loan to ever do. I can tell you this loan is easier than a VA IRRRL, so don't be afraid of it.
Yeah, and I think, you know, investors are really not bothered by the logjam in the housing market. They're still buying, right? So we see it. It's become our number one product, and they understand this is the greatest way to build wealth in this country is through real estate. So, all right, guys, let's get started. We got a pretty new website up here. I believe, Tom, you're going to take us through the highlights of the debt service coverage ratio loan.
Yes. So, John, if you go back just real quick to the screen that's hit programs.
Yes.
I just wanted to say that the DSCR is a umbrella, and it's an umbrella over your DSCR loan, obviously, and also it kind of includes the DSCR closing seconds and the foreign national, which John mentioned a little bit. So that's kind of what it entails. So, okay, John, go ahead and click on the DSCR loan for us, and we'll get into some details here. Yep. So without having to regurgitate what you see there on the screen, it is a loan based on no employment and no income from a borrower. You're using the property to qualify on its own, which is the way that commercial property is done. So this is a hybrid residential loan, commercial loan, that you're using the income off the property to qualify that debt. So we're doing up to an 85% LTV with a minimum of a 680 FICO. The 85% does require a minimum 720 FICO and a 1-to-1 ratio on that DSCR. We're doing loans up to $3 million and up to 6% seller concessions. And maybe I'll have a chance to visit a little bit about that later. I don't want to take up all the time. But this goes for purchase, rate, refi, cash out, rate and term. We also have delayed financing available. We do have a 1007 waiver, automated AVM, which I think John wanted to talk about a little bit later on. Yep. But this is a program that we innovated, and so far no one else has come out with this. So it's a great ad for you as a loan officer or loan originator. Air DNA analysis is what we really want to get into today as well, as for your short-term rentals. New feature is instant, the AVM that we talked about. And then DSCRs, you don't have to have a property that cash flows. If it doesn't cash flow, it's a negative cash flow, or you don't have a DSCR calculation at all, we have options there. So when you say no DSCR, I mean no income, no employment, and no DSCR calculation.
So Tom, people might want to ask, why would someone buy a property like that, right?
Right. So it could be that the property is in a neighborhood and it needs a lot of renovations to it. That could be a possibility. Sometimes, there's all different kinds of reasons. I'm not sure what you're alluding to, John.
No, exactly what you talked about, Tom. It was, maybe they know this property, they're going to go in, they're going to gut it, clean it out, and remodel it and rent it for so much more. So that's kind of where I was going with that, Tom. So thank you.
Right. Yeah. So that is definitely an option. And when it comes to refinances, we do want the property to be occupied. Well, if it's not occupied, we can use a no DSCR option, and when it comes to that. So there's ways around that as well. So again, no income.
Yep. Real quick, for the vacant properties, again, your short-term rentals, it's always going to be the case for the most part. Not always, but that's perfectly acceptable if on your appraisal it's marked as vacant with a short-term rental analysis, whether you're doing short-term narrative form or Air DNA on a purchase, that is perfectly acceptable.
Exactly. Thanks, Jack. Appreciate that clarification. So again, no income, no employment required, qualifications based on the property cash flow only. Our guidelines state a maximum 5 loans per borrower. I have personally gotten books of 10 loans done. I've heard of somebody else getting 12 or 14 done. It really depends on the strength of the borrower and the strength of the properties, but we will look at exceptions when it comes to that. We have no limit on the number of properties they have financed. So we don't care how many properties they own. And this is where it gets into the difference of where do you want to go conventional lending or have to go to a non-QM DSCR loan, because your conventional lending is going to limit you. And we're not going to limit you there when it comes to the number of properties they own. Again, we're not going to look at the Schedule E's on the tax returns. We're not going to look at rent rolls. So there's so much more ease in doing these loans, especially for your real estate investors that have multiple properties. So it's a great loan for them. First-time home buyers not allowed. That's what we were talking about. If you don't own a primary residence, we would like to see that. If you don't, there are some exceptions there. Say that you already own other rental properties. I had a person that was in the service. They were actually stationed in Okinawa, Japan, and they wanted to buy a rental property in San Antonio. We got an exception for that. So we do want people to own a primary residence, but we will make exceptions. We will close it. I'm sorry, go ahead.
Yeah, Tom, you hit on that nail right on the head there. With the experience Jack has, Tom has, all of our account executives across the country, reach out to them. They know the kind of deals that get done here at Angel Oak. And, there's always exceptions to be made to every deal. And a lot depends on the quality of the borrower. So, sorry, Tom.
So John, what do you think our percentage is currently of exceptions that close?
A good amount. I'll leave it at that because compliance is going to look at this, and I don't want to get my hand slapped anymore.
I'll call you after. So we
non-warrantable condos, by the way, on exceptions, just as we're talking it, non-warrantable condos all day long as well on this product. I'm not sure if we hammered home. Love the non-warrantable condos on this product.
Thanks,
yeah, Jack, who knows what's coming down the road with Fannie and Freddie with the changes that they're going to make to the condo market. I know that hasn't been settled yet or defined yet, but this could be huge for the condo market, the non-QM space. So,
yeah, agreed.
Yeah. So we will close in the name of LLCs, S Corps, and C Corps, or revocable trusts. So that's not an issue for us. There are some limitations to the number of members that those companies and LLCs can have. We will lend it to permanent and non-permanent resident aliens. And as Jack mentioned, warrantable, non-warrantable, and condo hotels are allowed in this program. Now, if you are a correspondent lender, this doesn't really pertain to you. But if you are a broker in this space and you have a license in any state, you'll notice there's a list of states down here, the other states that you can do lending in, as long as you have a license in a single state. If you are with a larger company, sometimes you need to check with your corporate office to make sure that they will allow you to do this. But we do allow this other states to be done as well as the state that you're licensed in for these. So some good flexibility there. Yeah. We do allow adjustable rate mortgage on these. Again, AirDNA, which we're going to be talking about, the automated rental AVM. All these are great options to help you close more DSCR loans.
Yeah, thank you, Tom, for covering that and concisely. I appreciate that. Sean's asking a question here, the Vantage Score 4.0. It's still early for us, Sean, to really decide what route we're going down, and then it also matters on when these loans get securitized. So there's a lot of unanswered questions there, but I did want to recognize, thank you for asking the question. So Jack, earlier, Tom mentioned, the 1003, no income, no job. Quickly touch on what you look for on a 1003 and really hit home on what we don't need on the 1003, but also what we need and what you're looking for on a credit report, because you guys are pre-underwriting these files.
Yeah, John, we are. Not only are we pre-underwriting these files, I mean, granted, for AirDNA short-term rentals, we're pulling those up front for you. We're running the rental AVMs up front for you. We're pulling all this stuff. So if it's not cash flowing on your 1007, which with most lenders is a dead deal, it's not a dead deal with us. We can flip to an interest-only payment, get your ratio up, call it a day, it closes. Or we can go no ratio and call it a day, it closes. Or you turn around, you go rental AVM, we take higher of the 3 on a purchase or 2 on a purchase because it'll just be your 1007 rental AVM with the long-term rental analysis. But going back to the 1003, John, specifically, let's just look at the employment section. Like Tom said earlier, no business, no job, no income, right? So similarly, on your applications, you don't have to fill that out. You don't have to fill out section 1B. Obviously, there's no need. It's a no DTI program. So you can just leave your employment section, your income section blank there, okay? For the real estate owned, anything that's owned not by your borrower. So for instance, if there is a property owned by an LLC, then it doesn't necessarily have to be listed because your applicant doesn't own that property, correct? So again, just a couple things that we look for on your application in your real estate owned section in the employment section that aren't necessarily required on a DSCR loan that you're used to filling out for a conventional or any other type of loan.
One of the things, John, and this kind of goes into kind of just going into our tips and tricks here. We do 85% LTV on these loans. There is a pretty heavy LLPA on those. And those also require a 1.00 DSCR. So you have to be able to cash flow at an 85% LTV when the market is increased in value, when the market has higher interest rates as we do right now. It's very difficult sometimes to get an 85% LTV to cash flow at that 1.00. Jack mentioned you can try to do the interest only. You can, but one of the things I don't hear very many people talk about is a 6% seller concession. Have your investor, and if they're not sophisticated enough to do it, you're going to have to do it for them, which is go in there and run the numbers. Is it better to lower the price of a home or to get a 6% seller concession if you're trying to maximize your debt service? And if they run the numbers on it, you're going to find that a 6% seller concession versus a 6% lower price in home is going to get you approved with your DSCR more often and give you better cash flow than knocking the price of a home down. So that is a great way to get into some real estate investors and realtors and talk to them about strategy and win their business.
Yeah, we just got a heart from John on there. He loved what you just said. And Jack, I'm going to ask you a question here, and I don't know if Tom touched on it earlier while I was scrolling through. Do we allow gift funds for this program?
Oh, of course. So borrower has to contribute 10% of their own verifiable funds and then highlight 3 months reserves. By the way, that's only for subject property. So if the borrower, and I kind of want to touch up on the reserves, if the borrower owns 10 properties, 20 properties, maybe they just have a bunch of LLCs set up, own all these properties, we're only looking at subject property reserves, which, by the way, that's a perfect client for a DSCR loan because you think about your application, your real estate owned LLC owning a bunch of other properties, don't have to be listed if they're not owned specifically by your applicant. But then also on top of that, you're not having to show mortgage payment history on all those properties. We're only looking at mortgages reporting on credit, primary, and subject. So again, if the borrower only has a couple properties listed on their credit report, you're only going to have to provide mortgage history for those programs. So just get a mortgage statement to match the address with a specific payment listed on the credit report. You're good to go there. So again, 3 months reserves only on subject property. Gift funds allowed if we can document 10% down, 3 months reserves of borrower's own verifiable funds. Business funds also are allowed as well. I get that question sometimes.
Yeah, Jack, great. And I'll while you're on a streak, how long do funds need to be sourced and seasoned?
Sources see 30 days. So I know Stacy always likes to say, but 30-day source and seasoning. So yep, 30-day source and seasoning.
You did the last webinar with Stacy. You're picking up some bad habits. But hey, it's really how we get things done, though, right?
Right.
And you could tell Tom and Jack and all our other account executives, they are really motivated to help you close your loans and find creative ways to get those done. So, Jack, talk about the credit and specifically what will report on personal credit or what won't report on personal credit.
Great question. So again, these loans, business purpose loans, they won't be reporting on the borrower's personal credit, first of all. Second of all, so what we look for is 3 trade lines of 12 months in reverse or 2 trade lines of 24 months in reverse. And yeah, that's what the borrower needs to be able to qualify for a debt service coverage loan. And then also, obviously, we do require borrower owns a primary, but we do have alternative scenarios where if borrower is a seasoned investor, doesn't own the primary, we do allow that. So again, borrower doesn't necessarily have to own a primary, or borrower can be first-time investor, own a primary, be first-time investor. That is acceptable, all the way up to 85% loan to value with a 720 plus FICO. We don't have LTV reductions for first-time investor.
Yeah, and as Tom mentioned earlier, I like that you mentioned that, Jack, about I just lost my train of thought. Oh, about being a first-time investor, because we have a habit of talking about this program like for a seasoned investor, and I'm glad you brought that up because it's also for that first-time investor. So thank you for answering that. So no, the question's already been answered. Thank you. So Jack, what are some of the other? I'm looking for some questions coming in here. We talked about seller concessions. Tom mentioned there's no limit on the amount of properties that an investor can have. Jack, Tom, talk a little bit about delayed financing if you can.
Sure. So, we do have the investors that are going to be buying properties in cash and want to come back in after they maybe have rehabilitated the property or just want to do a quick purchase and get that property financed out. If it's less than 6 months owned, we will do a delayed financing. We treat it as a purchase. So we'll use our LTVs and requirements for cash like a purchase. So we will use the appraised value or the purchase price, whichever is less, as our basis for the LTV. So if you have a property they purchase for $100,000, it's going to be treated as a purchase. We will come in and do a 90% loan off of that $100,000, which means they have to have 10% of their own money still remaining in that property. We won't do 100% financing. Once it gets to 6 months and 1 day, we will go off the appraised value with a supportive AVM, and we will do it off the appraised value. That means they can go in and do all the improvements to the home, and then we'll let them get cash out on that property. Those are some great options. The delayed financing, if they use hard money, it is an exception for us. Sometimes if they use hard money and try to do rehabilitation at the same time, those get pretty complicated. So make sure you talk to your account executive on those, but those are exceptions.
Yeah, Tom, and I'm glad you said, exceptions. Talk to your account executive up front. We kind of look at ourselves as account executives as confessional booths, right? Tell us everything you know. We will keep you from getting that aha once the file's been in-house versus we'll figure that out up front. And Jack, talk about the exception process, right? Well, let's talk about the pre-qual and let's talk about the exception process.
Yeah, we'll talk the pre-qual and exceptions. Pre-qual is done up front, guys. It's done within 24 hours. I mean, I'm probably turning it over a little bit quicker than that. I'm sure Tom goes quick. These are quicker pre-quals, guys. For an exception, if you need an answer on an exception that we know has to be had for us to be able to finance, because again, you're confessing to us what the problem is, and if it doesn't meet guidelines, we'll be able to send up for an exception. We'll be able to get you an answer within 24 hours. And this is a surefire answer. This isn't a, hey, oh, you're good, you get to underwriting, your loan dies. No. This is an exception that lasts, right? Yeah. And so this is a, if you need an answer on a DSCR loan, again, this is what your account reps are for. I've been doing 5 years, right, John? So it's like, I've been doing so many of these where we know what we're going to be able to do, what we're not going to be able to do. And if it's something that requires an exception, we can get an answer real quick within 24 hours. And then boom, we're on our way. We have auto disclosure feature. You can on paper register a loan, auto disclose, submit the loan to underwriting, which is literally just clicking a submit button, all within 1 business day. You get your conditional approval back in 2 business days. And boom, you're closing your loan within 2 weeks in some cases. So if your borrower is quick to respond, you got to get this done quick. This is what this loan is for, guys.
Yeah. And Jack, Tom mentioned cash out 6 months, use appraised value. And you mentioned reserves, 3 months reserves. Can cash out be used for reserves?
Of course it can be used for reserves. And we have a lot of cool features, again, with a cash out refinance. If you're doing a short-term rental, we can do a short-term narrative form, or a 12-month Airbnb VRBO look back. If you're doing a long-term cash out refinance, we can do a rental AVM, or we can use the 1007, or we can use a lease agreement with 3 months rent receipt and proof, and we take higher of the three of those. Okay, so again,
go back through that process, Jack, because this is all I'm glad you're doing it, because this is all done at the pre-qual stage. Now we still need an appraisal, but this is all done up front, guys. So go through that process again, Jack, please.
Yeah, guys. And if you're tired of your realtor nagging you in underwriting, waiting for that 1007 to come back, I mean, here's your answer right here is we'll pull your rental AVM up front for you. On a cash out refinance, we'll be able to tell you with confidence if the loan is going to work with a rental AVM. And again, we can also use a lease agreement with 3 months rent receipt. So you have two options on a cash out refinance before the loan even gets to underwriting, before you even have to order your appraisal or 1007. We'll have an answer for you within 24 hours of you submitting your pre-qualification on our website, us taking a quick look, and I can tell you whether or not your loan is going to work up front within 24 hours, not even dependent on that 1007.
So I just pulled over, and I don't know if I can see it, or I'm going to have to stop sharing my screen and then reshare my screen. Air DNA. Jack, talk about the Air DNA. And I don't know, can you guys see this, or probably not?
Yeah, we can see. We can't see the Air DNA, but I'll be able to kind of touch up on this while we're just in the middle of this. I mean, Air DNA is a great feature. I always get the question, hey, do you take a haircut on anything? Do you take a haircut on Air DNA? Do you take a haircut on the rental AVM? Do you take a haircut on the 1007? The answer to all of them are no. We don't take any haircuts, okay? So more specifically, Air DNA, it gives you projected revenue, and then it literally lists your operating expenses. Market score, by the way, is related to market score, occupancy percentage. We don't take anything related to occupancy percentage or market score. And as for expenses, anything like that, we're just taking your projected revenue and using 100% of it divided by 12, call it a day. I mean, it's as aggressive as it gets for a short-term rental. So we're extremely aggressive with your short-term rental properties, which, and speaking of properties that I also wanted to touch up on, and it sometimes falls under the short-term rental category, is we also allow rural properties up to 10 acres as well. So some food for thought. I'm in Georgia. I've got Blue Ridge Mountains right up north. Perfect example of an investment property purchase that you rent out in the mountains, short-term rental, Air DNA it, and you can get it to potentially work up front within 24 hours. So guys, just a lot of cool tools that we use and we know how to use, that you're getting answers quickly and often up front on your loans.
Yeah, because we know, Sean's also asking another question, manufactured homes. We just rolled out manufactured homes. It's not available on our debt service coverage ratio, but we did just roll out manufactured homes. So maybe it's time for us to do a webinar with just that. So, but thank you for asking that question, Sean, and thank you for your participation. So, Tom, I'm going to ask you a question about credit scores. If you have two borrowers, which credit score are you using on this program?
And we take the higher of the two credit scores, or if all the borrowers are involved. I had recently had one that had 4 different borrowers on a single purchase, and we get to use the highest of all 4 of them. So highest credit score of all borrowers involved.
Say that again, please, because I love that.
So if you've got a borrower with the score of 680 and you've got a borrower with a score of 780, we get to use the 780.
Yeah. So that's been a recent enhancement. I say recent, it's probably been a year now, but it was a great enhancement. And Tom, another enhancement, if there's a spouse not going on that loan, can you use funds from that spouse? I guess I'm answering the question for you. I'll let you finish it though.
Yeah. And it's not considered gift funds. So you can use those funds and it's not considered a gift situation.
Yeah. So, and as Jack said earlier, you can use business funds too. So we're really, I mean, I like to think, we're easy to work with across all of our programs, but this debt service coverage is, as Chris Barker says, it's a bulletproof loan, man. There's really, regardless of how it cash flows, just can continue to work through the tiers of making this thing work and still close a loan and keep a borrower and hopefully a referral source realtor happy.
Yeah, and
Let's
John,
yeah.
I wanted to touch up on that higher of the two mid FICOs again, just for people to understand, because I get this question all the time from my clients. Oh, I've got a borrower, 650 FICO score. Can we go DSCR? I'm like, okay, do they have a spouse? Yes. What's their mid FICO score? 710. Okay, put them both on the loan. Boom, we have a deal. It's something as simple as that, guys. The higher of the two mid FICO scores. Okay. Now we'll still look at credit for the borrower who has a lower. Yeah, we're still going to do a credit review for that borrower. And I'm going to be able to advise if it's like mortgage, a ton of mortgage lates or something that actually causes concern. But if it's some credit, high balances, a couple credit lates and stuff like that, that borrower is not disqualified from qualifying on the DSCR program. Okay.
Right. And Jack, I think you mentioned it a while back, qualifying the borrower using the interest-only payment.
Yeah, interest-only payment. So again, guys, if you can't get your property to cash flow with a 30-year fixed loan, you're not out of the game just yet. In fact, a lot of my loans in underwriting, for instance, there's 1007s or the rental AVMs, or all of them are coming in low. Okay. What we can do is we can pivot to an interest-only payment to help, because obviously your interest-only payment is going to significantly reduce the borrower's payment. And John, if you will, can you click on that DSCR loan calculator?
Well, yeah, and this is just, thank you, Jack, for bringing this up. We have so many tools on our website, and again, our new website, easy to navigate. But I pulled it up earlier, Jack, and I put in a scenario for the sake of time. So go ahead if you just want to talk about some of these things here.
Yes. So specifically, this happens, a handful of times where I can just come. Anyone can come to this, but if I have a loan in underwriting and it's not cash flowing, and my clients, hey, Jack, what can we do? I just come to this calculator. And if you're 0.9, 0.91, 0.92, in a lot of cases, you can pivot to interest only and get your loan to qualify to 1-to-1 ratio. Now, granted, we can still make it work below a 1-to-1 ratio at 75% loan to value with a 700 plus FICO. We can go down to a 0.8 ratio. But again, if that's not an option and borrower doesn't have 5% more down and you're at a 0.95, flip to interest only, and it's a recasting loan, guys. So again, if a borrower is a business owner, and I always advise my clients, is the interest only option is a great option, because if you have a business owner that needs the cash flow, they're not putting money towards principal, but they could be saving a couple $100 a month on the larger loans. You'll even see in the thousands that they're saving a month. But
Jack, even in this scenario, this borrower is saving almost what, $300-400 here.
400, yeah, almost $400, right?
Yeah.
My math might be off, but yeah,
No.
just about $400. And granted, that they can invest that money to scale up their business, or shoot, if they want to, and then you lump sum a down payment towards the principal. Let's just call it 5% more down towards your principal payment, and it recasts the next month, and then their interest only payment, their monthly payment, is going to decrease by that remaining principal balance. So guys, you not only are you saving your borrowers cash and giving them a better liquidity source, they get to use that money and put it wherever they need to, but they also have the ability to recast the loan.
So Eric's asking, can you approve a DSCR? So Tom, Eric's asking, can you approve a DSCR? And we covered this earlier. So, but I think it needs to be repeated. Can you approve a DSCR less than a 1 ratio, Tom?
Yes, we have actually two buckets when it comes to pricing. One is a 0.8 to 0.89 and a 0.9 to 0.99. Those are different income buckets. The LTVs are the same on those. And then again, below a 0.8, which again, that's the negative cash flow. Below a 0.8, we've got our no DSCR option available. So there's lots of different ways to be able to make these things work.
So Eric, short-term rents through, that is the issue I've been having. So Eric, we covered, and Eric, we'll probably have your account executive reach out to you, but Eric, we covered short-term rentals. So I don't know if he's asking about cash out on short-term rentals, or is that just purchase, Jack, if you maybe want to take a shot at that?
Yes. Yeah, so cash out short-term rentals, we're using a 12-month Airbnb or VRBO look back, or a short-term narrative form. So on your appraisal, it can be a vacant property, obviously, that makes sense. Short-term rentals, it's being rented out. We can use your short-term narrative form. Now, you need to be able to select an AMC, and we have a couple outlets that will allow, that have a decent short-term narrative form, but you can order that in lieu of a 1007, and we can use that short-term narrative analysis to be able to use it to cash flow on a cash-out refinance for a short-term rental property. On top of the fact that we also allow 12-month Airbnb VRBO look back. But if you don't have those full 12 months, you can use a short-term narrative form produced by an AMC that has that form available.
And like you said earlier, Jack, take the greater of the three, right? So
yeah,
that's
exactly.
awesome.
Yep.
So let's keep moving along here because we got some other great tools that we want to show too. So let me do some navigating here. Jack, you're going to cover some highlights of our closed-end second lien.
Yeah, of course. So the closed-end second program, this is a DSCR closed-ended second. Minimum DSCR ratio is 1.2. We go up to 700 or 70% CLTV with a 700 FICO, 75% CLTV with a 720 plus FICO, loans up to 350,000. And then obviously borrower does need to be a seasoned investor, so two plus years, and we'll use the lease agreement and 3 months receipt as your DSCR. So again, this is a cool product that we offer, especially if they have a low first rate. Not as aggressive, obviously, as the first lien DSCR cash out, because we do go up to an 80% cash out on the first lien. DSCR, it's more or less if that borrower needs that first, wants to keep their first, that's okay. We still have this option available for them.
Yeah, Jack, I think it's, I mentioned some of the stats earlier, 40% of the people, if they own their home outright, right, they're probably just going to do a cash out.
Right.
But if, they have that, as Eric Morganson says, generational low rate on those properties, they're not going to want to move on that first. And we have options. We have this DSCR closed-end second. We also have the bank statement HELOC for second homes and for investment properties. So again, I think the most important thing to really emphasize here is reach out to your account executive, because they're going to really put you and your borrower with the best foot forward in closing those deals and making better financial decisions. Our account executives are almost like financial advisors. They're not, don't quote me on, they're not, but they will help you be that advisor to your borrower database. So Tom, we've talked about, let's jump into, because everyone wants to know, how do I get a rate quote? How do I get this 1003 credit report? How do I get, if it's a bank statement, how do I get those to you? So Tom, let's take us through that. I'm going to go back to the home page, Tom. So take me through how to price a loan, how to get us a pre-qual.
Sure. So let me just kind of preface everything with, if you're doing non-QM loans and you're working them through an investor who does not do a pre-qualification for you, stop. That's the reason why you may not be too happy with non-QM lending, because in pre-quals, and Jack sees it every single day, and I do too, there are so many things that you've got to get right with these loans that we can help you with, or to change the structure of your loan to get it approved. That's what we're here to do. So if you're not working with a pre-qual with your lenders, please give us a shot. We're going to help you get more loans approved by doing a pre-qual. So
very well said, Tom. Thank you for saying that.
The way you said it.
Appreciate it.
So our pre-qual system is part of our pricing system. So if the non-QM quick quote, they're on our system, the very first tab on the bottom under powering, you click on that. It's going to take you to our pricing engine. You're going to choose whether you're a broker or non-delegated, so broker. It's going to remind you, we've got an option here of all the programs that we have. You can click DSCR. And it's going to remind you that we do have 7/6 arms available for that program. Continue. And this is going to put you into the pricing engine. So John's going to fill out some typical loan amounts and LTVs and credit scores that we see. And this is going to give you a price. If you know your lender paid compensation, it will add that to it. If you don't know your lender paid compensation, you can do a borrower paid quote. In
Tom,
this selection, you're going. I'm sorry. Go ahead, John.
we didn't ask. The question wasn't asked, and I usually do ask it. Talk about the prepayment penalties here for a second.
Sure. So options of prepayment penalties are from 0 to 5 years. I'll just throw in there a PSA, which is I never suggest a 0. If your borrower is wanting 0, there's a chance that that's going to be an EPO, and neither one of us, as a lender nor as a broker or a commission salesperson, want to have to deal with an EPO where anything's got to be paid back. So offer up a 1 year or greater, unless you just know for sure that it's not going to be paid off within an EPO period, and you can discuss that with your account executive as to what that might be. So the 3 years, what we see mainly, obviously, the higher you go in your prepayment penalty, the more expensive your loan is going to be. So just got to weigh that out.
Yeah, Tom, you brought this up, and I think it bears repeating. This is not a fix and flip program, right? This is not that. Right. This is your investor that wants to hold on to that property. So, yeah. Exactly.
Yeah. That is a program that we don't have and don't want the DSCR program to be that program.
Correct.
You're going to select your DSCR there. There's, like I said, there's different buckets for different LTVs and different LLPAs. Then you're going to select borrower paid compensation. This is going to show you rates that are available. And you can click on any of these rates if you wanted to move forward. But
Tom, we're talking, and our average credit score usually runs about 740 to 760 on this program. But I just want to point out something here. 760 score, fixed. This is a fixed rate, 3-year prepayment penalty, LTV 75%. You're looking at a rate between 6.375 and almost 6.5 at par, or 6.5 a discount. Go ahead, Jeff.
I had a loan officer the other day tell me that our pricing was better than what he was getting on a conventional loan.
And that's what, thank you, Tom, teed it up perfect. So, yeah, I mean, because of all the LLPAs that they've put on second homes and investment properties over the last 3-4 years, these rates, this is a par rate, but I mean, these are great rates. Sorry, Tom.
And depending on who you are, who your company is, companies have to watch their percentage of investments that they send to Fannie Freddie. So yes. If they see their percentages of investment properties going too high, they may back off on their pricing and charge you a higher price to ward off those investment properties. So, keep an eye on it. If you find yourself being priced out of the market with your company, try a DSCR loan. It could be the one that you're looking for.
Valentino, we'll get your account executive to reach out to you to teach to go in even more depth on this program. So thank you, and thank you for being here today. So Tom, this is pricing engine. I know Jerry Calderon says it was his 8-year-old daughter. I think she's 11 or 12 now. She could run this pricing engine, and it's that easy. We continue to, we've enhanced this probably about the last 4 or 5 months, and we just continue to make things easier for you as a loan officer and your borrower to close a loan.
And if you don't get pricing, if you put all your information in there, you don't get pricing, call your account executive. It could be a small tweak. It could be an exception that we can provide for you. But please make sure that if you're not getting product or pricing here, to give us a call and let's see if we can help you get it through.
So Tom, let's click on the rate here. Yep.
Yeah. So if you've decided that you want to move forward, you're not locking a loan here. All you're doing is going to go in and run put in your quick qual. So from here, we're going to ask you to give us all the information you've given us. You're going to fill in your information. You're going to fill out your account executive information.
Tom, talk about the property address and why we're asking for that.
Yeah, very good. So the property address will automatically populate that AVM that we're talking about. So the AVM, this is a proprietary, well, not proprietary, it is something that we as Angel Oak developed with a provider. And as far as I know, we're the only ones that are still providing this. So that address is going to be pulled into our pre-qual system. The pre-qual system is going to automatically run a rental AVM for you. Rental AVM means it's going to go and run that market analysis of rent and let us know what we're going to expect to be able to use for your rental income. So we'll know whether are you at that DSCR of 1.00 to 1.10. Do we need to change it at this point in time? Not at this point in time, but during the pre-qual. So it's very important that you put that address in there. I know that you're not maybe triggering your loan on your side. You may have it as a TBD, but be sure you put your address in here. That way we get the information we need, we can help you with. So fill out your information, your company information, your MLS number. You're going to download or upload your 1003. Make sure your 1003s are complete and accurate. Make sure you got your taxes and insurance in those. That's important information for us to have. But again, you can leave out your employment. You can leave off your income. You can leave off your liabilities. It doesn't matter. We're not going to be looking at those to be able to qualify your borrower. So upload your 1003, upload your credit report, any additional documentation that you may have, and click submit. And it will come to Jack and I and the other accounting executives. We'll get an email immediately, and we'll get in there. And like Jack said, it takes us very little time to be able to run these, so we'll be able to get on these pretty quickly. And let me just say one other thing too, and I'm not sure if you're going there, John, or not, but once you do this, and I get, and Jack gets, the A's get these, and we have pre-qual your loan, possibly with your AVM, then you can, at that point in time, submit your file into underwriting. And you can also request your disclosures in our system. You can have this loan pre-qualified, you can have it disclosed and into underwriting probably within 3 or 4 hours. I see it happen every day.
Yeah.
So if you're wanting to get a file into underwriting and get it into the queue, this is how to do it quickly. Yeah,
Tom, well said. I mean, it's, with self-disclosures, it's the processes. And it, we call it, certainty of execution, right? Jack says it, we're doing the AVM, the 1007, the short-term rental. That's all being done with Tom and Jack and any other account executives across the country. So it doesn't, like you said, if you're struggling with your business, this loan is probably the quickest way to increase your pipeline out of any loan. I think the bank statement's very, very close second because there's more self-employed borrowers than, any other workforce out there. So, but that's my plug for bank statements. But so Jack, let's talk about, we really haven't talked about marketing. Another great tool we have available to everyone on this call is, one last question, Tom, do you need credentials at this point to get a pre-qual?
Good question. Yeah. Our pre-qual, the pricing engine, there's no credentials that are needed for anything. So all this can be done even before you're approved with us. So if you're trying us out, that's fine. But this doesn't require any credentials at all.
Yeah. And we've had an influx of people getting approved with us. So I know a lot of you out there, I'll wait till I get a loan. Even though this goes very quick, don't wait till you get a loan. And I love our client relations team. They turn stuff very quickly, but try not to wait until you get a loan. So Jack, let's go back to the homepage, talk about, marketing.
Yeah. So this is a tool that everyone has access to with credentials. No, the pre-qual, you don't have to have credentials. Now for the marketing portal, you have to, but it's also free. So you just have to reach out to your account rep. They'll provide you with the credential form. It takes a minute to fill out, send it back over to us, and we'll have it within 30 minutes to an hour.
Jack, hold on, Jack. You brought it up.
The broker resources. Oh, it's on there.
It's on here, and it's online.
It's online too. So yeah, feel free to just go directly in, and then you'll put under the account rep, you'll put Jack or Tom, and then you're going to send it in. but yeah, reach out to your account rep, and again, you can get the form or just go directly to the website. And John, go ahead and log in, and you'll see we have a bunch of marketing material for everyone to access, and it's free. We have flyers, we have social media content, which, by the way, I do a bunch of social media posts myself, try to collaborate with my clients and their closings, share it to our databases, hit all the realtors to generate that repeat business. Just plenty of tools to help you guys be successful and just constantly be churning through that pipeline. So yeah, John, if you go to flyers, we'll touch up on flyers first. This is pretty cool. We have a handful of different flyers. We have one specific, I believe, to CPAs, right, John? Isn't there a CPA specific flyer? That's great for bank statement. Also not terrible for this one because a lot of self-employed individuals also happen to be great referral sources for the DSCR program as well. But then we've got the DSCR one, and you're going to be able to input your picture, your company's image, whatever you want on these forms. That's a great, and it'll look exactly like you'll see John's picture, John's contact information. You can share this to your database, download it, and share it to your database for free. That angel oak, by the way, is not actually on there.
I need to take that off, Jack, because that is,
it's confusing. That angel oak logo is not on there. You'd be able to input your own logo on this flyer and be able to shoot it out to your database. So the flyer is a great tool. We have this for every product that we have. And then also a few others, CPA flyer, 1099 flyer for realtors. By the way, realtors are a great referral source for the DSCR program as well. A lot of them want to build investment property portfolios. This is a perfect program for your realtors as well.
Yeah, Jack, and the great thing about that is, like, we know on our bank statement program, about 9% of the loans we close on our bank statement program are realtors because we're gathering that information on the loan application, right? But the DSCR program, debt service coverage ratio program, we don't know that because we don't put job information or income information on that. So I'm going to assume that it's a lot higher on the DSCR. So so let's talk about social media.
Yeah, so social media, great one. I know obviously you have Instagram, Facebook, maybe TikTok. I mean, I don't even have TikTok myself, but Instagram, Facebook. We have LinkedIn. We have a handful of different flyers for just about every product that we have, or maybe every product. You keep scrolling, obviously, bank statement for realtors down here, cash out refi, and it doesn't have our logo on it, so you can download this. If you have a Canva account, take it over to Canva, input your information on it, boom, post it to your social medias. It's very simple and easy access and free. Again, you guys will all have access to this today with your credentials. So
Jack, we call it, we need to change this. And Savannah, I know you're on this call. We need to change that investor cash flow because that's an internal name we give it. We need to change that to the debt service coverage ratio and even the flyers. But like Jack says, we have the content right below here. If you're directing your efforts towards borrowers or you're directing your efforts towards realtors. You don't try to overthink this. This is all done for you. And I think I counted, Jack, you could probably one time a week either do a flyer or a social media post for an entire year. You have your marketing campaign developed for you by Angel Oak. It's just, Tom, and I know, let's talk about the realtor presentation, Tom. And I know, Jack, please feel free to chime in here too.
Sure. Yeah. Well, also too, before I mention that, I just, when I saw the cash out flyers, people might just go right by those cash out flyers thinking rates are too high for cash outs. I'm not sure about what the company's percentage of cash outs are. Mine's pretty high in my pipeline. Right. So we have a fairly high percentage of loans that we're doing that are still cash out, even though the rates are as high as they are. So don't discount going out after cash outs.
Yeah, and to touch up on that, I mean, shoot, if you want to get 2 transactions, do a cash out refinance using a DSCR, and then a purchase, use those funds as a purchase for a DSCR. So again, create just a
reason why they're taking the cash out. That's right.
Yeah, and again, just unending pipeline right there.
Yeah, I think there's like $37 trillion worth of equity, tappable equity in.
Tappable.
Yeah, there's lots of it out there. So just as the rest of the flyers, the realtor presentation is a white labeled, and it's designed for you as the loan officer or your account executive or the two of you together to present this information. It's high level. It really asks or has the realtors think about their pre-qualification, because you know that the realtors are pre-qualifying your borrowers. What if your borrower said, or your realtor asked the borrower or the buyer, or what do you do for a living? Well, I'm self-employed. Well, have you filed tax returns? No, I haven't filed tax returns in the last 3 years. What is that realtor going to do? They're going to say, I'm sorry, I can't help you. There's no loans out there for you. I see this time and time again whenever I do the realtor presentation. I'll ask the realtors in the room, what do you do with that borrower? They say, well, we tell them to go file their tax returns. That's not the answer. The answer is, don't worry about it. We've got a bank statement loan that we're going to do. That's the reason why it's really important to educate these realtors. DSCR loans, they get above the Fannie Freddie limit. What are we going to do with them? Well, hard money only. No, that's not the only option anymore. DSCR. Now, as we saw, 71% of the people online here have done a DSCR loan in the last 12 months. It's getting more popular. It's getting out there, but there's still realtors that don't know what this option is. The presentation can be designed that you can put your logo, your contact information in there. And again, you can do it on your own. It has an event flyer that you can send out to invite people to it. I've had brokers do this as a lunch and learn. I've had them do it online. I've had them do it with a Zoom with me on it. So there's all different kinds of ways to do it, but it's really good high-level information just to get the realtor to call the loan officer.
Right.
They're the ones that are going to be able to tell them whether they can or can't do the loans.
So Tom, I use your example when I do other webinars, and you're not on them, so and I steal your example. Just share with everyone on this call. Share the example that one time you Googled real estate investment groups.
Sure. Yeah. Real estate investor groups. I was just curious here in the Dallas-Fort Worth area of real estate investor groups that might be interested in the DSCR loan. And I think I stopped counting after 20. So there's 20 real estate investor groups out there. And, they may or may not have somebody they're happy with. They may or may not know about the DSCR loan or other ways that we can help them. 6% seller concessions, those types of things that maybe they're not getting with other lenders. So these are great opportunities. This realtor presentation is good for your real estate investor groups as well. It can be and by the way, this is a PowerPoint presentation. You can go in and manipulate it as you wish, take things out, add things if you wish, but it is yours to do with what you want.
Great for new construction, by the way, too. We allow new construction on the DSCR, 6% seller concessions all day long. That's perfect example to utilize that 6% seller concessions with new construction properties allowed.
Yeah, I think, Tom, the other thing you said, I think you went on behalf of one of your loan officers and presented to one of those real estate investment groups. And a lot of them did not know about a debt service coverage ratio loan. And another way to spin this too, guys, if you know a hard money lender,
yes,
that's another good resource to go after, because they need to get their money back, and it's usually within a year's time frame. So you could have a pipeline of people ready to jump into the debt service coverage ratio loan, permanent financing, and you found another resource to get. And remember, 6 months we can use the appraised value. So Tom, anything in closing?
Well, we didn't touch on the foreign national. Do you want to do that?
Yeah, I want to be respectful of it's almost the top of the hour, so
okay.
I want to be respectful of everyone's time. We'll do it at another time.
Okay.
But foreign national, it falls under the debt service coverage ratio, and it's a 70% LTV. And we can have you, if you're interested, reach out to me, put it in the question queue, and we'll have your account executive cover the foreign national program with you. But Tom, anything else in closing?
No, that is the easiest loan, by the way, to do. It's easier than a regular DSCR. So
You're right.
There's no credit. I think we've discussed this quite a bit. Hopefully we brought some ideas, not just information about programs, but maybe how to go out and get more loans, more production. I think, John, and you said it many times, the marketing portal is probably the least used or underused thing that we offer. And I think it's a great asset. So get out there and use it. Let people know about it.
Yeah, try it. What does it cost, Jack?
Free.
So Jack, anything else in closing?
No, John. I mean, just appreciate all your guys' time. Just rely heavily on us. You know, that's what we're here for. We appreciate everyone. And again, we're here to help you guys build those businesses. So appreciate your time and hope everyone has a great rest of your day.
Yeah, thank you. And Jack and Tom, thank you for volunteering your time too. I know you guys are extremely busy. It's the end of the month. But on behalf of everyone here at Angel Oak, thank you for attending. For the 71% that have done a DSCR loan, if it was with us, thank you.
Way to go.
If it wasn't, hopefully you feel confident that and in good hands that we can close your loan. And for the 29%, it's hopefully you learned today enough about it to just be a little bit dangerous, but take your account executive along with you on that journey as you look to close and originate your first debt service coverage ratio loan. So on behalf of everyone here at Angel Oak, thank you for attending. Again, this is recorded. This will be sent out before end of day tomorrow. But thank you. Have a good rest of your month and rest of your day. Thank you for attending. Thank you, guys.
Thank you.
Thanks.